Jewelry isn't a gift you give just once. It's a way to remind your loved one of a beautiful moment every time they see it. Blue Nile can help you find the gift that says how you feel and says it beautifully, with expert guidance and a wide assortment of jewelry of the highest quality at the best price. Go to BlueNile.com and experience the convenience of shopping Blue Nile, the original online jeweler since 1999. That's BlueNile.com to find the perfect jewelry gift for any occasion. BlueNile.com.
A lot of these big companies that we now know that are in the 200 that have come from the microcap space, I mean, they've really been funded and built on the capital provided by Australian retail investors, mums and dads, through SMSFs in more recent times, but through their share trading accounts, in the early days.
G'day and welcome back to Shares for Beginners. I'm Phil Muscatello. Today I'm pleased to welcome Mark Tobin, the founder of Coffee Microcaps. G'day, Mark.
Hey Phil, how are you?
So Mark is an analyst who focuses on the small end of the ASX. It's a part of the market that doesn't receive a lot of attention. It carries a lot of risk and rewards. Mark's been passionate about finding undiscovered microcap stocks ever since he began his career as an equity analyst in Sydney. So Mark, what's your definition of a microcap?
Yeah, I guess my definition is kind of anything under that 300 million market cap, which I've kind of taken over from the US market. The US market, that's a very hard and fast level that they use for defining microcaps. Whereas, some of your audience, if they start researching it, I find in Australia the definition varies from person to person, from fund manager to fund manager. Some will say it's the same as me, like under 300 million. Others will push up the market capitalization a bit to 500 million. Other fund managers will say, it's really anything outside of the ASX 200. So for me, it's those stocks under 300 million and kind of anything up from, let's say, 10 million market cap.
Yeah. Okay, but you focus on particular kinds of stocks, don't you? It's not a lot of this sector is like junior miners and biotech companies. That's not where your area of interest is?
No, I tend to look outside those names. I mean, microcaps are kind of under-researched in any event, but just because there are a lot of junior miners in the microcap end of the market, and biotech, which kind of gets kind of put in under technology as well. There's quite a lot of those names down there, so obviously they garner a lot of attention. I focus on what I call industrial microcaps, so it's basically anything outside of those two sectors. So that could be, technology companies as we would know them, but small media companies, small engineering products, industrial products companies, small telecoms companies, small financial services companies. Those are the ones I think that, don't really get a lot of airtime or a lot of interest in the market. There's not really that many platforms for them to showcase their story and what they're about. And I mean, mainstream media, unless it's some junior miner or biotech that's up 400 or 500% on the day, and that's just will be a snippet somewhere in the AFR or the business section of The Age. They don't really get mainstream coverage full stop. I find it's more, they're more focused, the media guys, on what's happening with CSL or the banks or Fortescue. The really big names.
All of the big names and everything.
Yeah, all the big names that at the top end of the index.
We should explain at this point that you weren't actually born in Australia, and you're not even in Australia at the moment, are you?
No. Yeah, it's a kind of
it's quite obvious.
Kind of convoluted story of how I came to focus on Australian microcaps. Yeah, so born, bred, grew up in Ireland. It was 2007 I came to Australia for the first time. Actually got a job in Sydney working for Ellerston Capital, which most people would know as the kind of funds management arm of the Packer family. Went to London September 2008 trying to get a job in finance, which you can imagine was difficult. But anyway, managed to get a job, worked at a couple of hedge funds in London for about a year and a half. So yeah, came back to Australia and got a job working with Jeff Wilson and the team at Wilson Asset Management in Sydney. Then, married a South African girl, and that's how I've ended up back here in South Africa. But I've been doing various bits of analyst work, consulting work, writing articles for Livewire, Shares Cafe, a few resources online that some of your listeners might use over the last couple of years on microcaps. And in the start of 2019, I was getting more and more frustrated. There was no outlets for, I guess, the microcap companies that I look at. So I decided, well, I'm going to start my own conference. So that's what I did.
When we were talking before, you were saying that you're more of an event manager these days. And so that's your role. That's how you see your role now, as publicising these kind of companies that are not getting that much coverage or attention. Yeah,
I say it's more of my role because, I vastly underestimate how much work goes into an event before I started. Like a lot of things in life, you think, oh no, this can't be too hard.
That's really easy. Yeah, that's right.
Yeah, exactly. Can't be too much to it.
Yeah,
and just the response from people from the first one. I kind of planned, maybe I'll do like one a year. And then people were like, when's the next one happening? Lots of people after the event in April asking me when the next one was. And I was like, I can't wait a year to do another one. So I said, let's do one in October. So I did one in October 2019. And I was supposed to do another one 26th of March in Sydney again, but coronavirus...
events intervened.
Yeah, events intervened. The other bulk of my time is, researching these companies to find ones I think would be interesting for my audience to hear, that my audience would be interested in, because I'm trying to add value to them. I like say to myself, I try and get the audience to come away from the day with we have 12 companies present, so I try and get 2 companies out of the 12. If you can come away from the day with that, saying, those looked interesting, when I go back home, I'm going to do a bit more work on those, or try and find some research on them, or ask my broker or financial advisor about them. That's what I'm trying to achieve for most people. If they can come away with 2 good ideas, 2 good stocks that potentially might end up in their portfolio, I think it's been a worthwhile exercise for the attendees.
One of the big differences between these companies and a large listed company on the ASX is the ownership. Larger businesses obviously have the big fund managers and the institutions and ETF providers owning them, but the smaller companies are much more what they call the retail end of the market, aren't they? They're more mums and dads and smaller investors that get interested in these companies.
Retail investors, mums and dads, are like the bedrock of microcap investors, and providing capital to microcap companies to try and grow in Australia without a doubt. And I guess the easy way to see that is if you take out the annual report of CSL, for example, and at the very, very back of the annual report they have to list who their top 20 shareholders are. And most of the time you can look down there and it'll be, the big ETF guys for these days anyway. So it'll be like BlackRock, Vanguard, then it'll be like the big fund managers probably in Australia. So you'll have Pendle, Perpetual, those types of names, maybe some of the big international funds out of the US. But if you take any microcap annual report and you go to the back of that and look for the top 20 shareholders, you'll find a lot of the senior management and the board will probably be in the top 20, but then you'll see the rest of it is, apart from maybe 1 or 2 fund managers who might be in there, you'll find a lot of mums and dads, like a lot of, Joe Mascatello and family SMSF in there, Mark Tobin and Lee Tobin SMSF in there, or, some little PTY investment company that they have is in there. It's a very interesting contrast if you get the 2 of them printed out and put them down your desk and look at the differences. It's a totally different shareholding base. So yeah, I mean, a lot of these big companies that we now know that are in the 200 that have come from the microcap space, I mean, they've really been funded and built on the capital provided by Australian retail investors, mums and dads, through SMSFs in more recent times, but through their share trading accounts, in the early days.
It's interesting, isn't it? Because you often think of mum and dad investors and SMSF investors. You think of them being quite conservative, and you often hear of them wanting dividends, and they're only investing in the banks and so forth. But it's interesting, isn't it, that there's quite a bit of passion for being behind innovation in Australia.
I mean, when I used to work at Wilson Asset Management, just to give you a couple of insights into the mindset of these investors, because we ran listed investment company vehicles there, we had AGMs the same as any other company. Talking to those investors, a lot, the typical profile, a lot of people there probably over the age of 60. So you would think they'd be quite conservative, but they love a growth story. They like something that's kind of growing and moving forward. But I think we were down in Melbourne and I was talking to some gentleman, and we always used to pick out one or two stocks from the portfolio that we thought, were interesting or whatever. And he came up to me after the presentation and he said, no, I know you gave me the two stories in the presentation, but, I want something like, a bit more risky, a bit more excitement. And I said, well, that's not really kind of, what we do. We're trying to look for, kind of more steady state companies. Yeah, but, I don't know how much long I've got left. I need a bit of excitement. So, I guess, you got to be careful about how you think about this.
Can you buy a Ferrari?
Yeah, exactly. I think you got to be careful about this group of people. They've got a wealth of life experience, and depending on what they've done throughout their careers or their own business life, they probably have a wealth of business experience as well. So they can also do a fair bit of sense checking and analysis on companies themselves. Maybe it's the Aussie battler mindset, I guess. It's like these small companies and they're trying to make it, or maybe they're trying to disrupt one of the big incumbents, whether that's on the ASX or in the industry that they're in more broadly, whether they like the risk taking or they want to support something small or they're looking for something that can grow and develop. And it might be a business that their son or daughter works in. It might be a business in Melbourne that they know, the head office is down the road. Because a lot of these businesses, they're not in skyscrapers off Collins Street or Macquarie Street or Eagle Street, depending on which state capital you're in. They're generally out in kind of neighbourhood office blocks, most of them.
Okay, you've started investing in the share market. Now, how do you track trades, dividends, distributions, and franking credits, and all those other goodies? Throw away those clunky spreadsheets with ShareSite. I have my portfolio on ShareSite and everything is automatically recorded. ShareSite are pleased to extend a special offer to listeners of this podcast. 2 months free on an annual premium plan. Go to sharesite.com/shares for beginners and sign up now for a 7-day free trial. That's sharesite.com/shares for beginners.
At Staples Business Advantage, our team of experts can help you find the breakroom products to satisfy everyone's preferences, while AI can
suggest popular items, monitor stock levels, optimize pricing, and automate reordering.
AI can do a lot of things.
But I can never know the taste of a truly great cup of coffee. Sigh.
But you also can't get hangry.
This is true.
At Staples Business Advantage, we help you select from 2,000 breakroom products, so you can be sure there's something for everyone.
Yum. Sign up today and save 20%.
Staples Business Advantage.
Business is
human.
And that's one of the other interesting characteristics of these kind of firms, is that you have a great deal of access to management as well, much more than the bigger end of town.
Oh, definitely. I mean, a lot of management, I find, they're like very approachable. They understand their shareholder base. They understand there's a lot of retail investors in there. If you drop an email to the CEO, because a lot of them, they print their phone number, email address, at the end of most ASX announcements. again, I mean, that would never happen in an ASX top 20 name. They'll have an entire investor relations team internally just to manage shareholder queries. And so, the only time you'll see the CEO is at the AGM, and I know some of them do hang around after the AGM is done. You might get a quick chat to him for 5 minutes. Whereas on the flip side with microcaps, if you email the CEO, more likely than not, they'll probably email them back. They'll probably email you back themselves. I think it's a big benefit talking to senior management. If you send them a long list of questions and they come back, or they do a quick phone call to you, because the numbers are one thing, what they release to the ASX, but it's getting context around those numbers that really makes a difference. So if you see a headline flash up for XYZ company down, profits down 25% year on year, think, oh my God, that's like a terrible result. But that might just be that one major project that was supposed to start in April has now been pushed to July, and actually they've upgraded the scope of work, and it's going to be 25% bigger than it was. So if you look into next year, it's actually a win for them. The slight delay has meant the actual full contract has got bigger. Having that interaction with management gives you a lot of context on the numbers, like from year to year, and also context of where they're going in terms of the broader strategy.
There is an index, isn't there? There's a small cap index on the ASX. I was having a look on the CompSec site to find out what that code is. Is there a code that you can look up this index for?
Yeah, well, there's actually two indexes to look at. So there is the Small Ordinaries Index, which
do you have the code for it?
Would be, I think it's XSO is the code. So that's used by, I guess, a lot of the kind of small cap managers and even microcap managers, strangely enough, right across. That's probably the one that most people, definitely in the institutional space, would use and be familiar with.
Yep.
Then there is actually an ASX microcap index, which is the one that I look at, and that's the ASX Emerging Companies Index. And the code for that one I know is XEC.
Right. Yep.
And I've been doing some analysis on the index over the last 2 months with everything that's happened with coronavirus. So, I mean, just to give you an idea of the volatility in microcaps, March 2020 was actually the worst ever month for the index since the index started, which was in January 2004, and it far surpassed the worst month in the GSC, which was October 2008. And now we just finished April last week, and April 2020 was the best ever month for the index by a long way.
Yeah.
So both on the downside in March, it was like the worst ever month by a long shot, and April then was the best ever month by a long shot on the way up. So if you want volatility, come to the ASX Microcap Index. And even within the worst month, just to give you some further insight. So in March, we had crazy up days and crazy down days. Obviously more down days than up. But one of the up days towards the end of March was actually the biggest single day gain for the index since it started. But that's the kind of, I guess, market that we're in at the minute. Extreme measures are obviously being put in place globally from a health perspective and a social perspective and a business perspective, and that has been the share market is a mirror of the economy, society in general, and that's been mirrored in the moves we're seeing in share prices and index both in Australia and globally.
That's an interesting thing about this sector, though, is because it doesn't have the same amount of liquidity as the larger capitalised companies. So it's actually a smaller amount of money moving in and out of the system. And I've heard you speaking about price discovery. Can you just give us a bit of context about what price discovery is and how liquidity actually affects that?
So price discovery, I mean, it's where, buyers and sellers meet every day, and, every trade is a price discovery in itself, because the buyer thinks he's got it correctly priced and the seller thinks they've got it correctly priced, and you end up at the share price that they agree on. Now, if you've got a low liquidity stock, that means you haven't got that many buyers and you haven't got that many sellers. So the opportunities or the frequency of price discovery is, much reduced in the microcap end of the market. Now at the top end of the market, you've got trades going through. I'm sure your listeners have probably read a lot about algorithmic trading and all that semi-controversy that's happening at the top end of town. And the ETF providers obviously provide huge liquidity at the top end of town. So, price discovery there happens much more frequently and is probably, I'd say, generates much more kind of accurate results in terms of what the true underlying value of the company is at that present minute reflected in the share price. Whereas at the smaller end, you don't have that frequency of price discovery. So you can have a greater, probability of things being underpriced, obviously, and overpriced on the other side, because you haven't got that quantum of buyers and sellers meeting on a daily basis, hourly, minutely basis to work out, okay, what is the kind of fair value stock price of the company at a particular time. So that's another reason I'm attracted to the small end of town, is because you have less price discovery happening. You've got more chances of something being undervalued by the market purely because there isn't a lot of people focusing on it and a lot of eyes looking on it. If I can expand a bit further on that in terms of price discovery for the institutional names, Goldman Sachs had a good piece out the end of last year where they were just talking about, the analyst coverage of, this was now in small caps, so, kind of one level up. So there you're probably talking about market caps kind of 300 million up to about $1.5 billion. That's kind of the small cap market cap range. But they were saying, since the GFC, the number of analysts in the sector, this on the sell side, so that's working for, Morgans, Bells, UBS, Goldman's, Morgan Stanley, all the kind of stockbrokers most people would know. That has decreased, so there's less analysts covering the small cap universe, and even the analysts who are still covering the universe, they're all congregating around the kind of market darling names at the time. So there's a concentration of what they're researching on, and there's less of them. So you have even more stocks getting neglected. Now that's in the small cap. So in the microcap end, you can probably assume that there's even less coverage than there was in the GFC. In one way, it's a negative because it's hard to find research and hard to find information on these companies. So you've got to do a lot of work yourself. But on the other hand, that's what creates the opportunities. And I think that's why we've seen the last few years, we've seen quite a number of fund managers launch dedicated microcap funds, because I think they have come to the realization that there is a lot of mispricing down there. And if you are willing to do the work, there is the possibility of finding, a good portfolio of companies down there.
So are these managed funds or LICs or ETFs?
So yeah, both managed funds and LICs. So my old house, Wilson Asset Management, they've got a microcap lick now. Saphira they have both a managed fund and they have an LIC focused on depending on which vehicle might suit you best, you can access microcap equities through those guys. Perennial started a microcap fund just over 3 years ago. There's 4 vehicles, 3 managers that have started things in the last 3 years. And there's others, I just can't think of them off the top of my head now.
We've got a listener question from Trevor Myers, and that is about where do you find out the information? What's your go-to sources for finding out information about these kind of companies?
Yeah, so my go-to source, I think, is the ASX announcements page, because as I said earlier in the interview, it's quite hard to find these companies and find information on them. So the ASX announcement page is definitely number one. The setup of the page is it has all of the announcements for a particular day. So I just go on there 5:30 in the evening after I finish work, and I look down through all of the announcements that have been there for the day, and I'll click into ones, share codes that I don't really recognize or ones that I do recognize, and see what they're announcing. And that's a great way to find new companies to look at, because if you take out the ASX 200, there's still another 2,000 companies to look at on the ASX. So it's impossible for one person, or even really a small team of people, to keep on top of everything that's happening. The second place I kind of go and look at is a website that was started by an analyst called Andrew Page, called Strawman.
We've had Andrew on the program as well. He's
Oh,
a
great!
guy.
Yeah. I mean, Strawman to me is a really good resource, because there's a lot of microcap, small cap names on there, and I find the research
Great analysis as well, isn't there? And the research
exactly. I find the
fantastic.
analysis and the research of a really high level, and again, a lot of people who are posting on there are mums and dads, retail investors doing it in their part time, but they're putting out analysis that is, as good as anything that you will get from sell side analysts, broker analysts, because it's all about collecting information. And unfortunately or fortunately for microcaps, you got to do a lot of legwork to gather all of this information. But I find Strawman a very useful resource, and I think it's been I'll give kudos to Andrew. I think it's been a great addition to the investor landscape in Australia, especially in the small and micro end, just to provide a platform for resources and research that other people can use. The third place I kind of go looking for is on Twitter. A lot of the Strawman people I know are also on Twitter, but I find Twitter is also a good place to find new ideas. People are talking up, what's going well in their portfolio or going terribly in their portfolio. And I do take everything that people say on Twitter with a pinch of salt, and there's probably hidden agendas here, there and everywhere.
Got to watch out for that pumping, don't you?
Yeah, exactly. But in terms of trying to find ideas and things to look at, and what people are talking about in the market, because if one person, I guess, tweets about it, then you might see a few others, and it shows that there's kind of a level of interest. People, it's come on the radar of a couple of people. As well as that, people on Twitter might come from the actual industry that this business is operating. So, you might have somebody who's, from the engineering business, renewable energy, and there's a company in there saying their technology is the latest and greatest, and then you get a guy who's renewable energy expert or engineer who's working with installations of solar panels on a commercial scale daily, and he's like, well, we never use their products, I've never heard of this company. So that's not really insider information, but it's inside industry information, which
it's
again,
invaluable.
It's
invaluable, isn't it?
Exactly, invaluable.
Okay, the other question of Trevor's that we might just discuss is about valuing pre-revenue microcaps.
Oh, pre-revenue, very difficult. I tend to steer away from pre-revenue companies for a few reasons. One is, share valuation is a bit of an art in itself. When they don't even have the first line in the P&L, it's zero revenue. I think you're really pushing up the risk factor for one, and two, the modeling capability of what you can do, and I guess how accurate the results will be at the end. If you have the earnings and a track record of earnings, I think that improve probably. If they have no revenues, it is more difficult. Yeah, I mean, I don't really look at it, but one of the ways I think to think about pre-revenue companies is to think about, the market that they're going into. How big is their addressable market? So if they manage to commercialize a product, what is the opportunity for them once they have reached that stage? So then you can kind of get a sense, well, if they were 5% of this market, okay, well, what would that translate into in terms of revenues? Are they operating in an industry with strong tailwinds? You definitely don't want to be, I think, looking at pre-revenue companies that's got strong industry headwinds against them. what I mean by strong industry tailwinds are, macro themes. Some of the bigger fund managers, to put kind of fancy lexicon on it, is healthcare, the aging demographic. That's a strong tailwind for anybody operating in that space. The adoption of cloud and remote working, that's a strong industry. It's still going to be there. The move to online e-commerce has been around for 10, 15 years, and it's probably going to increase. It's had probably even a rapid increase in the last month or two. Is the pie getting bigger for the entire industry rather than is the pie getting smaller for the entire industry? And the other thing with pre-revenue thing is, and it's a guess really, but you have to make some kind of estimation on the time to profitability. And I think that is key. If they're at this stage now, let's say we go to the biotech guys, from a phase 1A trial, or preclinical, let's even go one step back to from a preclinical trial to, let's say, FDA approval with distribution agreements and, actually selling the drugs to patients, via doctors or hospitals, or if it's a medical device. That's generally, I find, about a 10-year life cycle. So I think with pre-revenue companies, you have to kind of think of what is the timeline to profitability, or at least first revenues, and then try and extrapolate back from that. Well, how much capital do we think is going to be required to get to that point?
Mark, thank you so much for coming on and chatting with me. I've got so many more questions that we haven't had time to get through, so I think we'll have to have you on again.
Yes, we can. Always happy to do a follow up, and just I guess for your listeners, Phil, if anybody wants to get in touch with me, they can very happy to email me at mark@coffeemicrocaps.com, or they can easily find me on Twitter at C Microcaps. So that's capital C and then the word microcaps.
Because it's a great end of the market, isn't it? I mean, for me, this is where the passion lies in the market.
Oh, yeah. I mean, I've been passionate about it since I kind of fell into it at Wilson Asset Management. I mean, they were more, a special small cap manager, but we had a section in the portfolio that was dedicated. We used to have, I think, about 10 microcaps in there that we thought, okay, well, these 10 we think can, really go on and kind of graduate up into the small cap end of the market proper. And yeah, I used to love that part of the portfolio, and because you were talking to companies that nobody was talking about. You wouldn't meet other analysts on the street, or meet them at briefings. We'd be going out to their offices on a little kind of road trip, or if they were ever in Sydney for something, we'd say, call by the office. We'd love to catch up and chat. And they were just so interesting because it was fresh ground that you were covering. It was something new. It's good to, I guess, unearth something before somebody else does. Yeah,
that's right. And it's also, you're watching people building dreams.
No, exactly. I mean, that's the other thing with microcaps. Invariably, the CEO is the founder, and it's their life's work that they're driving on and building on, and it takes it takes a long time, as any of your listeners will probably know, to build a business. It's a lot of the time it doesn't happen overnight. As I like to say, most small business owners, whether it's in your local community or companies on the ASX, they're usually a 10-year overnight success story.
Okay, on that note, Mark, thank you very much for joining us.
Okay, thanks, Phil. Bye.
No worries, bye.
Shares for Beginners is for information and educational purposes only. It isn't financial advice, and you shouldn't buy or sell any investments based on what you've heard here. Any opinion or commentary is the view of the speaker only, not Shares for Beginners. This podcast doesn't replace professional advice regarding your personal financial needs, circumstances, or current situation. Thanks to Christopher Soulos for music production with that special Greekalicious flavour. Remember, music always flows, even when the money won't.
At Staples Business Advantage, our experts can help you find furniture that fits any design and budget, while AI can
recommend products based on preferences, generate 3D models for visualization, and optimize space planning for office furniture.
take advantage of our team's eye for style and design.
And my eye for, wait, I have no eyes. Only algorithms.
At Staples Business Advantage, furnishing your office is easy. And with the best warranty in the business, we're committed to you now and down the road.
Sign up today and save 20%.
Staples Business Advantage.
Business is
Human.